Good morning, traders, and welcome to the Bookmap Pro Trader webinar series. Today we have Scott Pulcini. Uh, I'm Bruce here at Bookmap, and I'll host the webinar for Scott. And we'll get started in just a minute. You guys know who Scott is. He's here every week. In the advanced webinars, and he goes through live trading during this webinar. So you guys, if you're not familiar with Scott, he's got quite a unique background. Traded really heavy volume, 10% of the S&P E-mini futures back between years of 2002 and 2005. He is, we're very lucky to have him, expert scalper, but now he's trading order flow in a different way. I have his contact information here if you want to reach out. He does offer education and mentorship. Oops, that took us to the site. Yeah, we can. I'll paste these into the room so that you guys can visit those links if you want. They'll be live and active. Got to go through the disclosures, and then also want to share with you some information about our sale that we have for the next couple of days. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Our Black Friday sale, it continues until tomorrow. So if you guys are interested, very simply go to bookmap.com, click on the image here, and that'll take you to the landing page /Black Friday. You get 50% off of Bookmap for the first month. It's also, if you're a current user of like Digital Plus or Global and you want to upgrade to Global Plus, this will include it as well. So the goal here was to offer traders the ability to try Bookmap for a very, very discounted rate. So that was our Black Friday goal, and this is your opportunity. So, it's 50% off for the first month. Give it a shot, see if you like it. Come into the education here and learn and follow along, and see if this helps your trading. Simple as that. If you already are a Bookmap user and you want to try Global Plus, then this is for you guys too, to try it out for the first month. Get it half off, and see if you like it. Then if you don't, go back to your regular Global version. At least you gave it a shot. That's what our goal is. So let's turn it over to Scott. Scott, are you in here?
Yep, you hear me, Bruce?
Yep.
All right, 1 second here.
And sorry, guys, on Discord, we've been doing it in the these webinars in the special events room. We decided to do it. I decided to do it for today and for tomorrow in the advanced webinars where we typically are for this webinar. So I didn't want to confuse Scott. Scott's like, where are you guys? so that was the main reason, to be honest. And JTrader, so they know where to go, and keep it simple. All right, go ahead, Scott. We're all set to go.
Cool. You see my NASDAQ screen here?
Yes.
Okay. All All right, so watching this closely, there was a
December stock sell and Q 160 contract.
so just kind of what I was waiting to see here. So this is an important zone, obviously, after yesterday's ridiculous rally. This is an important area I talk about all the time. Trading these important zones, and you can see here, this was one of the main areas of charting that I draw my zones. We had a selling tail on huge directional conviction out of here that led to this entire down move. This is actually it retested it here, and then we're back into the zone, and we're struggling here first and foremost. And then there was a bunch of sell ice.
NQ December ice for buy NQ.
No, there's some bias too, but
per contract.
there was some sell ice here at the open, like waves of it. You can see here 150, 150, another 230. So you're looking at over 500 there. And then the numbers just came out, some stop runs, and now you're getting some more setup. So I'm going to delete this zone, and I'm going to draw the most current zone, and I'm looking to get short here based on that zone. So that's my thesis, right? But I'm going to let these volume events. These are the keys. I want these volume events to confirm my thesis, right? So every day we go over in my trade room, we look at all these different markets, and we come up with what we think is happening, and then we look for volume events in that direction, and that just helps, with your confidence in the trades. But you got to be ready to pivot if something, if something doesn't happen, what you think is going to happen. But the whole idea is if you get a day where your thesis is correct and these volume setups are in the direction of your thesis, then you can really go after it. As far as trading a little bigger, granted, we talk about all the time risk parameters, and I don't really want to go down that rabbit hole today and get all upset, but that's where traders usually blow their accounts. But you want to be when you have something that lines up either confluence with your thesis with the volume events. You can trade bigger. You never want to be risking more than 5 to 6% of your account size.
December ice for buy NQ 153 contract.
In an entire day. And the rule of thumb is usually around 1.5 to 2% per trade. But if you see a trade that is just exceptional in an area with everything lining up, like with your thesis, volume events, then you can trade, 2 to 3 times the normal size. But you gotta know, hey, this is your shot. If you lose, you gotta be, you're pretty close to done for the day, right? Or you have one more ball left, so on and so forth. So you do have those situations where you do want to, take a shot if you're right. So you can see here, there's a lot going on in this area. We had we had the stop runs, and then we had some bias here and more bias here. I'm going to just try to incorporate all of this. So, this is a volume event. So this is the driver of my trading. It should be the driver of anybody's trading, because you want to see what's happening in real time. Which way the volume is directed in real time. Volume drives price, right? You have so many people that trade off price and all these indicators and price indicators and price is great, but it doesn't matter if the real-time volume isn't agreeing with your areas. Right, you see here now this bias is starting to load up here. So like I talk all the time, this is the big money runs the show in here, but they're not always right, and there's other entities in here that can be fighting them too, right? So the odds of just clear this up, we'll draw a new one based on this new stuff. You do have the odds in your favor. So say you had you can see this bias still coming in. So say you had an extreme long bias right here, right? And you're like, okay, now I see this big money coming in behind me. It's go time, right? They're not always right. I actually have a setup called broken ice. So when they're wrong, it usually moves in pretty quick direction the other way. But my point being is, yes, it's good to be on the side of these guys, but they're not always right. But if this is starting to line up with your thesis, then it's like, okay, you could be just jumping in right here and say, I'm going to play this. But I personally my thesis right now is short. We haven't got a determination here. And look at all this bias coming in. You got 500. So you're looking at 500, another 100. So you got almost 1,000 bias here, over 1,000 bias, and it's still coming in. So this is going to be very interesting. This is what I want to see, right? I want to see committed traders in an area, because when it moves out of here, that's what that's when you get your bigger moves, right? And this is, instead of just playing the algo back and forth nonsense, this has significance, right? So let's draw the zone, and I'm going to show you another thing that we're doing in my room this week. I'm going to carry in the next week, as far as I'm just taking trades in a certain direction based on this other thing that I look at, as long as it lines up with everything else that I'm talking about, which we'll go over. So you can see here, someone's buying this, and it's not really agreeing with them right now. So you can see they're hammering these stocks as well. These are the the highest weighted stocks in the indices that drive the futures. All right, so let's draw that. All right, so that's basically your zone. So all I did there, I always get all these questions about drawing zones. It's very simple once you understand what you're doing here, right? So you want to get your crosshair going. And then you want to judge. You just literally, I take the bubbles off because the bubbles kind of throw off. You want to have this last price line that we've added very recently. It's always been here, but I took it off because it was annoying when I first started trading with Bookmap, and then I realized how important it is. So again, you want to right click on your volume dots, configure visible components, and then pick last price. That's actually last traded price. So when you're drawing your zones, you want to bring this down, and then it helps you draw the exact prices instead of using the bubbles that I was using, the edges of the bubbles, which is not correct. It's like this is not correct. So you want to zoom in too. So I want to move this up a tad. I'm doing all this. Hopefully I'm not missing a trade here. So I'm incorporating all this action that just happened in this position trade, right? We have two different trades that I do and teach in my trade room. This one, I will incorporate all of this into one big zone, right? So you had, again, 300, 160, another 500, and that's stretched all the way from here. And you can see the spike in the sub chart. The price went all the way down here and it was still coming in, and basically ended right. So you can see I have this a little too low, right? So I got to move this up a bit. And accurate zone. That looks accurate. All right. So what we're doing as well, we have
RTY December spread sell RT 151 contracts.
We have a spreadsheet we're using now in my room to make this more exact as far as entries, exits. We're using it for both trading strategies, but it can be used for this position trading too. So the top of the zone is 12,073.50. So we go to Q. And then we want to get the bottom of the zone in there. $43.75. So this is quite a large zone. And I want to pull my ATR. ATR is the average true range for 5 minutes. That helps me judge the current volatility in the market. 29.56, and I have a distinct exact system that I use to determine my entries and exits. So if we go down here to the position trading strategy, so if I want to get short aggressively, it's telling me I can go short at 12,011 quarter, and I could put on 1.58 and Q contracts, so I'll round up 2 contracts. That's risking 2% of my account size, right? This is very, very important. Again, members of my trade room get access to the spreadsheet where you want to really respect you have to respect your account size, because if not, you're going to blow out of your account eventually. You might get lucky for a while, but it will catch up with you. So that means I could put on basically 2. That's just me rounding up. Or I could put on 16 micros, right? But I'm not trading micros on this account, so just put on 2. All right, so that's step 1, drawing the zone, putting in the values. Step 2, and then I go and I'm looking at bigger picture here. We already looked at this area. I already know this is an area this market could fail, and it's already failing, right? You'd be amazed at how, when you know these areas, when the market returns to them, how often, I mean, this is literally exact to the top of the zone.
Stock sell NQ 208 contracts.
So what I should have done there is entered this aggressively, because in my zones I do enter aggressively. I didn't do that, and now I'm missing this trade. But now we have a new volume setup, so I can actually get short on this setup aggressively if I want, meaning aggressively 1 ATR out of here. 110% of an ATR. We'll go over that here shortly. Let's draw this zone. A little too much time describing that. I should have just jumped in this trade. I had a feeling this was going to happen. This was my thesis. Again, when you have a thesis, you don't want to be screwing around. You want to you want to get into the trade. So, I mean, there'll be more opportunities. This market has been so big. I mean, being short here is probably going to be like pulling teeth, even if it works out. So, I'm not worried about. I'm not going to be chasing this market. Is what I'm saying. I'll let this thing come back so you can see. Let's make sure that's correct. Right. So that's your stop run. I wanted to take a look at the logs. By the time I get all this done, I'm missing probably 100-point trade here. Yeah, so late to the party here. So this was another reason why I should have been aggressive on that setup up here. These are the Ludwig levels. I use these extensively in my trading. These are very, very, very powerful, especially when you can put the volume setups on top of these major inflection points. So the red is resistance, blue is support. We had everything going on up there. That was an important zone. I basically just dropped the ball there. I should have been short. The minute this thing dropped out of this zone, so it shows me on my spreadsheet, like I said, I should have been in short at 12, 11. I should have been short right there, and I missed it. So now I have to make a decision here because we are, like I just said, these Ludwig levels are extremely powerful, right? So do I want to be going short now? I was okay going short up here, but now that there's a new setup here, do I want to be going short right into this lug? The answer is unless the relative volume is extremely heavy, which would be this, I'm not going to do it. I'll wait, right? So you can see. I want to see relative volume that is at least 2 times normal for this 5-minute period. So this move down was close, but as we get to this lug, if I don't start seeing yellow bars, I'm not going to short into that lug. You will save yourself a lot of money just waiting for new lugs to be built and not trying to fight that. It's just amazing. Whatever her components are for her Ludwig levels, they are respected universally by these algos. It's quite amazing. I could bring up hundreds of examples, like basically recently these chart of these markets just bouncing off of these major lugs. So the point is I respect them enough where I'm not going to short on this most recent setup. So what I'm hoping happens here, which was probably going to happen, and then the other reason I don't want to short too is because you can see this is VWAP. So you got to always understand what's going on with these algos, right? Because when the big money's not in here, which is 80+% of the time, it's not big money's not playing in here. The algos run the show, right? So there's a lot of things going against going short right here. One, the Ludwig levels, the algos respect those. 2, you have an extreme standard deviation of VWAP, right? So this is VWAP. This is the 1 standard deviation called the daily value area. This is 1.5. This is 2. We actually got down to the 2 I just don't have it drawn, but that's over 2 standard deviations away from VWAP. It's when you get these reversion to the mean algos that try to push this back. So the point is I don't want to be going short right here. It doesn't mean it can't go lower, but my odds of being successful in everything we just talked about versus that happening, at least short term, are against me. So I'm going to wait now on this trade. I'll wait for that. I'll move back up to short this thing on a new setup. The thing I watch are these market profile composites. So when let's take a look here. Just want to see what this was made from. So this current one here is from back in September. So here that we ripped right through yesterday. So you can see here. This was yesterday's trade. I actually have to merge these 3 days, so this will be a good example of merging, right? So we had these are. So we have some more sell ice in here. So these are single days, right? So when the value areas overlap each other, then I will merge them by more than 50%, right? This obviously is not merged, or this one is not overlapping these 2 days, but this 3rd day, which was yesterday's ridiculousness, engulfs both of these. So I'm going to make this one composite, right? So I will merge this with the prior day, and then this with the day before that. Now you have a new composite value area, right? I know there's, market profile enthusiasts out there probably listening that love to like get subjective with these and like they cut off the tail and I am not a fan of that. I want the basic look of what the majority of traders are seeing. I don't want to be messing around with tails and getting rid of them and so on and so forth. So I'm leaving this exactly like it is once I merged it. This is my value area. And what you can see here, this is actually what you can do here because this was a composite. This was a single day. And then you had another composite. So what I'll do here is I can merge all three of these. Actually, this was another composite too. It was just that it was the holiday. But since these two overlap, I can merge all three of these and have a monster composite. So I'm going to do that. Let's merge this. And we're going to merge this. And okay, it looks right. So what I'm going to do here is cut this one off. Oops. I'll leave that one, but this is the main one here. Just make this bigger. So this is a very significant profile composite. So meaning if this market does pull back, one, you want to watch this prior one for a bounce. But this will be an important area where this market will probably bounce, right? And then let's look at bigger picture stuff. I mean, on the charting, it's 11,750. So that would be through this zone, but that would be, yeah. So you can see what this is, right? So this is a balance area. So the other things that very important aspects of understanding what's going on big picture, right? So this is two-sided trade over multiple weeks, right? It's breaking out. So many times when a market breaks out of balance, it will do the juke, pull back, either the top of balance, then go, or the high volume node, then go, right? It's uncanny. Like it literally, you have these algos that, stuff that's so obvious. Like I could bring my 11-year-old daughter in here and she can tell me what's going on here, right? So it's like you see this breakout, everyone wants to jump in, and then it does a screw you move, screws all the weak longs, and then it'll go, right? So it doesn't happen all the time. Sometimes it will just keep going, but the point is what's happening now is it's failed and it's coming back into this balance area. So this could be an area it stops, or more likely the high volume node. What's that high volume node? High volume node, that's 11,750 right in the middle of that puppy, and that would be the top of this composite. So point is, if you just wait for important areas and then get your volume setups, you will be a highly, highly successful trader. The problem is most traders can't be patient and wait for these things, right? That's why you want to be watching multiple markets, because you're not forcing trades then, you're just waiting. So you can say here, like I like what Scott just pointed out, or you already saw it yourself. You said, I'm not trading until this thing gets down to 11,750, then I'm willing to buy this thing as long as I get a bullish volume setup, right? I don't want to mess around in here in the middle of nowhere. I want to wait for this area. And then you just put an alert on your chart. When it gets there, you see if there's a volume setup and you jump in and there you go. And you're probably going to get a monster move back out of here. And if that doesn't happen and if this accepts in here, then this thing's in trouble, right? So these are called inflection points. So you want to wait for these areas to be trading. Like that's a good one. This is in the middle of nowhere right here, right? As far as market profile is concerned. So, again, if you can be patient and just wait for those areas, you will be highly successful if you add the real-time volume into your trading. You can still obviously trade those areas, but it's confirmed when you get the volume events in your favor. Speaking of volume events, here's another one here. So another thing we're doing in the room, we're using this called Algo Guy. You guys have seen this a few times. I call it Algo Guy. It's not called Algo Guy. It's an exponential moving average ribbons, right? So the blue is the short term, the red is the long term. So many these algos, there's tons of algos that are based on this aspect as well. So many times when you get the shorter term cross over the red, that leads into a trending type move. So what I'm doing for this week, and I'm going to do it for next week too, is I'm only taking trades in the direction of Algo Guy. Meaning so right now, if I got a long setup, I would not take it because I'm fighting. You want to get as many things in your favor as possible, right? We know algos are 80+% of the market. So it would behoove you to, let everything line up and then take your trade. So right now, if I get a long setup, I don't want to take that because this is going against me. These hours are going against me. Does it mean it can't rip up and this cross back over? No. But trading is all about odds. It's about probabilities. The probability of this pulling back to this red and then continuing lower are much, much greater than it ripping up through all of these. These are just individual moving averages, right? Longer term and shorter term. The odds of that ripping through there and moving back up are a lot less likely than it going into this red and then turning back down, right? So I'm only focusing on trades right now on the short side, which again, that you're seeing what I'm talking about as far as everything coming together, right? I already had the short thesis in that zone. At the red lug, again, I missed that trade up here, but we had the red lug, you had the cross, you had the volume events that turned bearish. You get everything in line, it's time to fire, right? So what I'm hoping for here, because we're still close to that blue lug, I want to pull back into here. And if we get a setup, I will jump in aggressively up there. And that would, what I'm hoping here is we get up at least to the yellow directional lug here, right around 12,034. That's where I should have been short from the beginning anyway, right around 12,011. So I'm hoping we can get a pop here, and the odds of that happening are very good because of everything we talked about. So we come up here. If I get a short setup, I know algo guys in my favor. I know this thing's bearish. That would be the, I mean, short term. It's not bearish overall, obviously. That would be the back to the top of this area. I have a lot of stuff in my favor. Yellow lug. VWAP will probably be down here by the time it gets over here. So I have yellow lug, VWAP, market profile, composite, red ribbon on the algo guy, and then a volume setup. I'll jump in aggressively. So that's how I trade. You know, that may not pull back in there, but you know, say this just keeps ripping down. Well, then I'm going to wait for some new lugs, new Ludwig levels, and I'll get in. Again, go to her website if you want to try it. She's got a 3-day trial. It's out on the Bookmap webinar, and she's got special pricing. Any questions on any of that, Bruce? a lot of concentration on NASDAQ today so far. Nothing's fired off in ES, by the way, so that's why I haven't. Actually, it has, but that was right after the number. Check this list too.
So, I mean, you're using the volume profile software. There is Sierra charts, right?
Yes, Sierra chart is what I use for the market profile, for my lugs, and for the relative volume. It's pretty cheap. It's cheap for a reason because you have to do everything yourself, and I mean everything. So, like when you first get it, you have to like build your own charts. I mean, it's very labor intensive, but you know, that's why it's cheaper. So if you want a like plug and play type of system, then you know, do a Ninja or you know, things like that where you don't have to do everything yourself. But if you're looking to save some funds, then you know, Sierra chart is good. It works great. You have to do everything yourself is the issue. If you're not technologically savvy, then it might be a problem.
Yeah, no, other than that, I mean, Luke, about the Ludwig levels, just, you know, go to Scott's website, and we're not going to answer any questions on that. And the ribbon thing, so we're getting questions on everything except Bookmap here. And guys,
well, I mean, I'm just showing
this
what it is, right?
A Bookmap webinar. So it's called, I don't know what it's called, trading ribbons or something like that. Ribbon indicator, something like this.
It's called exponential moving average ribbon. Just Google it.
There you go.
See it. If you come in my room, so my room is, speaking of that, you guys you're doing your little cyber special. Someone asked me if I put one up. If you go to my, I don't remember what the code is. So this I offered this through 12/5. What's that? Next Monday. So
December I sized for sell NQ 150.
I'll go there in a second. So just go to my website, go to the trade room. I'll just show you here. Like I do every week because people like email me not understanding. Go to here. And then for the monthly, just pick the monthly and put in that code, Cyber Monday, and you get 30% off for the trade room for the month. And then on here as well, you get everything I talk about. You basically get discounts, Bookmap, Apex trading. We can talk about that later. Spot Gamma. You get the Hero, the real-time Hero indicator. You get an extra week with this code. Tick Strike, which is this, and then Trader Sync. So that's everything I basically use. But in my room, they all have access to my Sierra chart templates and also my Thinkorswim charts, which has the algo guy, I call it, but it's exponential moving average. So you can get access to this where you just basically plug and play. You just download my setup, and then you get this stuff. All right, so you can see this is also the ES. This is turned down too. I was on Nasdaq this entire time, but we missed this monster stop run. So, most times stop runs are playable. This is actually one of my setups called a Dumb and Dumber, where it's not real buying, it's guys puking, right? So, this rips up and it doesn't hold up here and starts to fail. Well, then okay, there were no real buyers up here. This was just a bunch of traders puking. And I don't know who the hell was short after yesterday, who didn't get blown out after yesterday, but there obviously were some people that were still short, and they just puked them all up. And was that real buying up here? No. And what else did you see? We're talking about confluence, right? Again, I missed all this because I've been sitting on the Nasdaq the entire time and then not even putting on the trade. But you had some spot gamma levels here. The instant this failed, you could have just hopped in short, right? So I didn't love the area like I loved it in Nasdaq. This was kind of in the middle of nowhere. We weren't in an important zone. I was looking for either a move into this one, and we already got through this one. But what's happening now? Now you're getting so first of all, this is directional conviction, and I could draw a new zone here, which I will, right? So you got a selling tail, which is instant rejection. And then you had directional conviction. But what's happening now is we're pulling back to this monster balance area, multi-week balance area that it broke out from yesterday. So you have a very high percentage. These are the areas you want to be looking for trades, namely long right now. And I know Algo Guy is against that thought process. That's just one of the factors I look at. But these zones are important areas. So we remember how we talked about how markets will pull back to either the top of balance areas, which would be this zone and this zone, or high volume nodes of balance areas. High volume nodes are just where the most trade occurred in a balance area. Balance area are just two-sided trade where traders are placing bets, right? Placing their opinions, their ideas. When they're wrong, they puke them up. So many times, this is all very simplistic, but I'm telling you, the more simple you can make your trading, the better you're going to do as far as your thought process. Instead of trying to understand every single move in the market, just understand. There's any trader that held through this wicked, insane rally yesterday, and and they're still in their positions, as this comes back to these areas, that's where you get the waves back up, because you got these shorts getting out of their trades, right? So that's why these areas are so important. So if something like this happens as well, then you want to be ready for Armageddon, right? So if this does this and this gets through this area, 39, again, it's an area, it's not an exact price. I'd say 39.75 to 39.60ish. That would be a massive fail breakout of this structure, and you could expect one of those, right? I'm just giving you ideas. So when you're ready, every morning you should be bringing up your charts and looking at all these different if-then scenarios, right? So right now, I'm interested in going long in these areas. If this fails, I will not be going long, and I will be looking for shorts, and I'll probably be putting on some longer term shorts. Like this would be a massive failure, right? So you just keep that in mind. You're not doing anything with that yet, but you mark this area, put some alerts on your chart. So when you're like, this comes in, right? Say this is a straight move here, which it very well could. Just if it can do that, it can do that, right? This could all happen today, and you're like, okay, well, wow, we're at that very important area. I want to see what goes on here. Then you start watching your Bookmap. That's the webinar we're on, your Bookmap setups. And if they show you, bearish, then you're ready to fire. If they're bullish, this may bounce. Because the real-time buy-in is the most important thing. All right, so obviously missed that trade too. I would not have been aggressive on this trade unless we were at the lug. I don't know if we were at the lug. Hey, look at that. I mean, it's every day. You should see the traders in my room just amazed by, obviously, the Bookmap volume setups, but these lugs. There was no setup down. Actually, there was a setup down here. I didn't miss a setup, but it just bounced right off that lug, as usual. So let's see here. I really didn't want to go long down there, though. I'm looking more for shorts because, like I said, I'm trying to go in the direction of Algo Guy the next 2 weeks to try to increase my winning percentage. That's what I'll be doing in my room. So I probably wouldn't have taken this trade. But if you are like, hey, I wanna go long, this was the area to do it. So here's your volume setup at the Ludwig level. Those are key areas that you could be putting on trade. I'm looking for a pullback, like I said, to go short, but this was fine. If you're like, hey, this thing's going higher, this was your chance to get long. Let's see here. This was actually sell ice that came in that just got run over, obviously. It was sell ice versus the Ludwig level and the Ludwig level 1. And that's why I call them LUDs, so I don't have to say Ludwig level 400 times on a webinar. There you go. So what happened here is this fired off, and what do? We returned to the prior volume event. And it wouldn't surprise me if this held, wrong color, sorry, and came all the way back down here. So what I will consider, right, I'd rather this thing rip up a little higher, get a setup and go short. But if this comes back down here again, retest this volume event, and that's barring anything else coming in, right? If a new volume event comes in, then I got to redraw a new zone and then play off of that. But say nothing goes on and this thing fails and comes back and does that, then I will consider a long. And at that point, algo guy will probably be turning up as well. So we'll cross that bridge when we come to it. But the point is, my normal trading, I should have been short up here with what I'm usually doing aggressively out of this zone, right? And then what I would have done, I get out at major Ludwig levels and or opposing volume setups. So say I was short here, we talked about that, the 1211. Again, I just didn't put on quick enough aggressively. I would have waited, level levels here, and you got the volume set up. So as this moved an ATR out of here, I would have been out. So that would have been a nice 50-point trade. It wasn't huge, but that would have been a nice trade. Then, again, if you want to be long here, this was a trade you could have gone long aggressively out of this zone, meaning 1 ATR. So what I'll do here, if this comes back now, which it very, very likely will, retest failure, I will probably take a shot at the long. Let's take a look at, just want to see what algo looks like here. I mean, I would still have this against me, but you can see this is starting to turn up, right? So, you don't have to take that trade. You can wait, and once this turns up, then it's go time on the long side, right? Especially if it bounces off the lug again. That's just giving you information, and then you say, okay, say you're using this, and you say, okay, now we get the cross. Now I'm looking for setups, and now I want to go long and watch this thing rip, right? So this is going to be interesting. You're going to have a fight of the algo guys, algos, the cross, and we're pulling back to the red here. Right, so who's going to win? Is this going to fail and do another wave down, or is this going to pull back above? Right. We will see here shortly. But like I said, if this comes back down to this volume event and retest and fails, I'll take a shot at the long. Right, that's the volume event at the magical lug. If we do one of these, I will go long. Because again, I got these extreme standard deviations of VWAC algos in my favorite too that play reversion. So that's a very good, highly likelihood if this comes back, retest fails, that we're gonna rip higher. So we'll see. So that is that. Nothing else is really going on here. Crude, you want to be careful today in crude. This was a zone from earlier. They have OPEC meetings all day today, so you want to be very careful trading crude. But it seems like it's pretty quiet right now, so we'll keep an eye on it. But I'm not, what I tell my room all the time is, you don't want to be messing around in markets when new information is hitting the market, right? Because all bets are off. Volume events, prior volume events, anything you're trading off of, all bets are off when new information hits the market. So you got to be very careful when numbers are coming out. Obviously, I mean, most people already know all this, but you don't want to be putting on positions in the numbers and the OPEC meetings, so on and so forth. So I will be very, very careful trading crude today is the point of that. All right, we just heard something in soybeans. Let's take a look. So this was corn actually earlier. I hate trading corn because it's like watching paint dry, but this was very significant. I heard two different events in here. Let's see, yeah. So you can see there was 642. So this is large size. So my threshold for corn is 400, but you had 642 and another. So you have 1,000 sell icebergs in this area. And This is the usual pattern, right? You move away, and I guarantee this was probably an ATR. It might have been 2, and then the retest. So if this does this, I may go long corn. I don't really want to trade this market because it sucks, but there's nothing really going on right now, and I missed my NASDAQ trade, so I want to show you guys some trades in here too. Not that I will force trades by any means, but I will go to these other markets, and this is why, if you have the bandwidth, anybody can watch 3 markets as far as like in certain areas, right? But if you have the bandwidth, you watch 10, keep 10 up, 15, whatever, where you're just waiting for either important areas like we've been talking about or volume events. And when the volume, you can hear my volume events going off across these markets, then I pay attention. If I don't hear anything, then I'm not even looking at the market, right? That's how you don't pigeonhole yourself in playing a market that's doing nothing and forcing trades because you got to pay your mortgage, your car payment, or whatever. You will move to an active market, and that's the whole idea behind it. So, a lot of guys don't like hearing that, but it's truth. Bruce did a poll a couple months or a month ago asking if you watch multiple markets, and it was like 85% said no. It's like that you guys are just doing yourself a disservice, especially with this information you're getting at Bookmap, right? Like, it does not matter what market you are trading, futures market you're trading. Volume drives markets. So as long as you know the thresholds of each market, then you should be able to, you trade these. I trade these the exact same way. I know the thresholds, I know the ATR, I know the pattern, and then I take the trade, right? And then you factor in your other stuff, like your bigger picture stuff. So let's just do soybeans here so we can go over where we're at. I know that's buy ice, my sweet thinkorswim that never centers the chart when you bring it up. I just got off the phone with them, yelling at them because it's ridiculous. I don't know why my price points aren't on here, but so what do you see in this situation? What do we just talk about in the other markets? That is one massive balance area. Like, again, I don't even know how to bring these up right now, but it doesn't matter. This is multi-week, right? What happened? Tried to break out. What's it doing? It's pulling back to the top of this. And this was a zone from other stuff. This is an area, and then you're getting a volume event, right? So this was a prior zone with a volume event. This could be considered a new zone as far as the top of this balance. This is not a bad area to go long. Just thinking wise, I want to possibly go long in this area. Now I'm getting the real-time volume and it's buy ice. That tells me that may happen, right? So I know that in the back of my head, what's going on there. And then I take a look at my shorter term stuff. We just blew through the blue lug and built new lugs. So that's interesting. This, I have to actually merge these, so I can do this now. Let's just merge this and see where we are composite wise. And it's amazing for these as well. Like when you start to merge these and you draw the areas, you'll be amazed at how the market respects the areas, right? This one I can merge as well because 50% of this day was inside this composite, pretty close. Merge that one. There you go. So that's the most recent composite. Oops. All right, so this was a small, these are smaller. Obviously it wasn't, this one's a huge one. These were smaller ones here, and then you had this one here. So we're coming down here. We're not quite there. This isn't too far. This is only 3 cents away. So you have a volume setup at an important area. This is the top of this one, and pretty much the bottom of this one, right? Nothing really lugs, but we are extreme standard deviation from VWAP. Another reason why this can bounce. We already know bigger picture. This is still bullish, right? All we're doing is pulling back to the top of this mammoth, right? We talked about traders that wait for pullbacks to get the hell out of their shorts. So that's bullish. And now you have a bullish setup, right? So I will still wait though in this situation for a retest failure. So ATR retest failure. So right now, let's just do this quickly. ATR is 2.43, right? 5-minute ATR. It means it's about 2.5 cents. All right, so let's put our zone in and we'll trade this setup. So 2.43. And Zone was 50 quarter, 49.75. Again, this is a reversion trade that we're doing in my room. I'm doing 2 different trades for myself and for my room. You can learn this part of my room, but this is the one we're doing now. So if I want to go long, if I wanted to go along aggressively, I can get in at 14.52, 92 or 14.53. You can round down to 75. So if I wanted to go long aggressively, meaning just outside of, I go 110% of an ATR, right? I do that for a reason because you have these algos that snap back at ATRs. So when this market could prove and get outside an ATR, that's showing me it's fighting the algos and it's bullish enough to continue, right? So what I would need to see is this 53. If I wanted to go long aggressively, I get in right here. But I'm not doing that. I'm going to wait for the usual pattern where it goes in ATR, it does the retest, it does the failure, and then I get in, right? The problem with this, it's more of a confirmation type trade, right? With traders love the confirmation trades. Well, this is it. But the problem is this may just go like this and keep going. So you've got to decide. That's where your areas are so important. If you are in an area that everything's confluent, you're in a zone, the lugs are in your favor, whatever you're looking at, algo guy, we can look at that too. Everything is lined up, kind of like that NASDAQ short earlier that I missed. Then you just jump in. You don't have to wait for retests of the zones, right? You don't have to wait for retests anyway, but it's just a more secure trade in my opinion. So algo guy is against this long idea as of right now. So we'll see though. I'm still waiting for a retest failure. So by the time this pops, that's the 53. By the time it pops, comes back, retest fails, will probably be pulling across the blue over the red, and then you'll get the other way, right? But you can see these trends that happen with these things. I learned this again. I don't bring things into my trading very lightly. Like it takes months and months for me to watch something to agree. So I learned this from a guy I was mentoring on Bookmap, and this is how he would trade it. And he would wait for pullbacks into the red to put trades on, right? Kind of like one of these, and once it gets back below the blue, he would short. But this was out volume, right? And it obviously wasn't, his results weren't as good as he thought they should be. So that's why he said he came to me for mentoring on the volume events, right? Because I don't know if I've mentioned this is the driver of all markets, right? So then when he started incorporating this information with that's when he started to take off again. So point is I've been watching that for about 3 years. It's been 3 years since I met with that guy, and it's a very powerful thing to have in your trading, right? So that's why I keep an eye on it. I actually had a period where I didn't watch it as much, and I went back and I started researching some of my losing trades, and I noticed a high percentage of my losing trades were when I was fighting algo guy, which makes sense, right? Because algos are such a high percentage of the trade in all of these markets. You don't want to be fighting a major aspect of the algos, kind of like you don't want to be fighting the algos that are extreme standard deviation of VWAP algos, right? If you can it doesn't mean the market can't keep going. Sometimes we call them huggers, right? It'll hug the 3 standard deviation. Those are very rare. It's way more likely to do that. So do you want to try to take a shot on something that happens 5% of the time or something that happens 95% of the time, right? Again, trading is all probabilities. All right. A lot of talking. Bruce, any questions? I'm just waiting for some kind of setup here. I really want to go short. So I would not short this. See how we're coming back to this volume event. This is the one that I wanted to be short on. Again, I would have gotten out anyway here. I missed the boat. I missed a 50-point trade. But the point is I would not take this trade off of this volume event because we've had other volume events after that, right? So I need to see something new. You could. There is a very good chance that this comes here and fails again. But I need to see something fresh to take a short. But I'm ready to go short based on everything we talked about in this webinar, at the beginning of this webinar. So I'm keeping an eye closely on that. Yes, let's see if we're coming back to this one. No, yes, I possibly could take this trade. Let's see. Yeah, this was pretty close to threshold though. I mean, my threshold 700, you got up to 658. Yeah, 658. What I was looking for is if nothing else came in since this event, I could possibly short this guy here, right? If this fails. I may do that because this was technically not threshold, but it was pretty damn close. So we'll see. Hopefully something else will come in and I could trade off of that. But as far as NASDAQ's concerned, all we're doing, you can see where this bounced. That's why I said, if you had the long, long thesis, this was a great place to, at the lug, volume event. So I'm just hoping this comes back into the zone again, get a volume event, and I'll short this puppy again. Or not again, I missed the first one. Any questions, Bruce?
Yes. So, yeah, there was the question on an interesting one since we had Gary Norden yesterday, who's a dome trader, and maybe you want to explain why you don't use it.
Hold on one second. You got Squat Guy talking over you. I say that again?
So the question is, do you use the Dome Pro, Bookmap Dome Pro?
I currently do not. Not the heat map. You're talking about Dome Pro. I don't even have that on here.
Yeah, I mean
That's
you have access to it. You didn't add it though.
yeah,
But
I haven't used that. I want to take. I definitely want to look at this Trader Map Pro. We had a little meeting with Bruce yesterday. We went over this. This is very interesting. I mean, if you want me to bring it up and we can do it.
yeah, you can
What's going on?
play around with it. I mean, we're here for the live trading. That's what this webinar is all about.
Right.
But well, I'll demo it next week for sure, many
Okay.
times over. So
And what
I mean, you
details
used to
from
trade
the
off the dome a lot. You don't
indirect.
anymore. Uh, and you explain it as like you don't find an edge. You used to, but it's algorithmically driven, and the way that you traded before didn't work any longer.
Right. So, not that there's not edge. I mean, you can find edge in the Dome Pro. That is more, I'm assuming, again, I haven't watched it. So once I watch it, I can, tell you more at length what I think of it. But overall, I mean, you got to remember, I made millions of dollars scalping. So if I'm not scalping anymore, there's probably a pretty good reason for it because I like making millions of dollars, right? So the point is, it doesn't work anymore as far as tick for tick for tick like I used to trade, right? And well, there's many reasons. One, it's algos. The algos are 85, 90%. At one point I was one of the fastest in the world clicking the mouse in this dome, right? But I it was not as fast as a computer. And once the computer started taking hold, 2005, 2006, it was over, game over, right? So that was one of the aspects. At the time, the volatility was horrendous. So it was like the lowest volatility in history. Like we're talking, it was like the volatility, the vol was like at a 10 or 10 and a half, or I can't remember, but it was. So the point is, like the market would literally just sit like this for half hour at a time. And then what it would do, it would like make a run. So the way I used to trade, the way I used to scalp, and I would have all my resting orders in here. And back in the day, again, I got to bring out the videos. I got to transfer. They're in those little mini DVDs. But I had thousands of hours of videos of me trading because I used to watch my scalping to see where I can get better. So anyway, back then you would look at the order book and it would look like, I don't know if you guys I don't have 10-year notes on this computer, but it would be like 3,000, 2,000, 2,000, 3,000 down here, right? So I would put 1,000 lot on top of an order, and I put 1,000 lot on top of this order, right? And I'd know behind my order. So say it comes down like this and it starts filling my 1,000 lot. Well, I would look below and I would see 3,000, 3,000, 2,000, and I know if I was wrong, I can turn around and peel out on this resting size in here. Well, as anyone knows, first of all, the size is nothing now. And even if you were to see 1,000 lot, that means nothing now. It comes down and it turns into a 10 lot, right? And so you're like, oh, I want to buy. There's 1,000 lot there. I can get out if I need to. It comes down to that price, and then the 1,000 lot pulls, and it's a 10 lot, right? So you can't. There's nothing to lean on to get out of your trades, right? So if these algos pull, you're screwed, right? And if you're trading size, if I have 1,000 lot on, how many price points do I have to pay up to get the hell out of the trade, right? If I got short here, you could see quite a few. So that is why all these things combined, the short-term scalping the way I used to do it just does not work. Again, I would love to scalp. I'm a scalper. I don't, it's taken me many, many years to be able to put on trades and hold through the nonsense for hours a lot of times, right? So this is why most traders fail, because they can't stand this type of movement, and that's what the markets are, right? It's rotations, it's nonsense. Most of the time, it's nonsensical right? AKA nonsense, right? It's random. It's not random. These algos are doing whatever they're doing, but the point is you're not going to make sense of it. And this is what I just explained this, I think, yesterday in my trade room or 2 days ago. A lot of times, very, very, very highly intelligent people on this planet, like scientists, doctors, they just are miserable traders because they try to make sense out of every single thing that happens, first and foremost, right? So they just can't accept not knowing why it just did that or did that or did that, right? And there's a lot of times there's just no reason. You just have to accept this is why, like, I don't care about this. I care about volume events, right? Where traders are caught and I know how to trade them and I understand volatility in the ATR and how these markets respect that, right? If you're wasting your time trying to catch every single move or understand why every move is happening, you're wasting your time, right? So that's the biggest fallacy for really highly intelligent. Doesn't mean if you're highly intelligent you can't be a great trader. Don't get me wrong, but most guys that are very, very intelligent, they want to make sense out of every move and they want to change everything. I can't tell you how many people like come in my room and the whole point of my room is to teach people how to trade, right? The whole idea is you come in, you learn my method, and then as you get used to it and understand it and see the edge, then you can start to incorporate your own things in it, or where you don't wait for ATR, you get in right in the middle of the zone or whatever the case may be. I say at every webinar, this is the science. How you trade these areas is the art, right? But they'll come in here and I'll show them something that just works. Oh, I'm a profitable trader, so that means it works, right? It doesn't matter what I show them. They're always like, what if you take the moving average of the ATR and times it times 1,000? And it's like, you don't. Why do you need to do that? Just trade it how you see it, and then as you trade it enough and you want to start to make tweaks, it's fine. But that's the problem of a lot of really intelligent traders. I don't even know why I got on that tangent now, but point is, make trading, I don't care if you're a wizard, I don't care if you're Einstein, make trading as simple as possible. What I'm demonstrating today to you guys is making trading the simplest you can make it. You don't need to make it harder than that. As far as structure, know your balance areas, know where these trending events happen, gaps, directional conviction. That's a very important zone when we go touch that zone, right? Yesterday, you definitely want to mark this as a zone. Know your areas that are important. Understand where you are in your market structure. So, like for instance, like yesterday, anybody that's getting short right here is just not. And I know how tempting it was. Trust me, we were on the webinar with Bruce, and I was very happy because the longer you've traded, the more you say, this is nonsense. No, it can't go any further. That's nonsense. No, this is done now. Nope, it's done. It's done. And you get killed, right? And the longer you trade, the more you want to fade this move because how often does that type of move happen? Not very often, right? So, but the point is, if you understand the bigger picture stuff, the simplicity, the simple bigger picture, that this is a balance area. You do not want to be going short as this breaks out of this area. You got traders getting the hell out of their positions. Get me out, get me out, get me out. Make it simple. I don't trade shorts on breakouts of balance areas. That's the simplest I can make it, right? Now, once you get far enough away from a balance area, like this area here or in NASDAQ, then you can start to say, okay, I'm willing to possibly give it a chance, the shorter chance now. Like this one was pretty iffy, don't get me wrong. This is not really out of this balance area. This is pretty close, right? But you're fighting an important area. We got a bearish setup that you could take a shot there. This was not a high percentage trade, don't get me wrong. But the point is, fine, don't trade that right there. Wait, if say this thing rips up here, straight line up to there, then you can short with both hands, as they say, right? So the point is just make trading simple. Stop confusing yourself with 45 indicators, moving averages, all this other nonsense on your RSI, and make it simple, stupid. And there's nothing more simple than the balance or the market structure, important zones where market moves occur, and your real-time volume. It does not get any simpler than that. And you will be amazed if you just dumb down your trading, how much better you're going to do. So do you want to feel smart and try to figure out every nuance of every market of why things are happening, or do you want to make money, right? So when this thing I talk about this all the time too. When Bookmap released this 3 or 4 years ago, when I finally listened to Bruce and started using it, and then I would talk about it on webinars, and then you had all these, they're not even competitors in my opinion, but they would come out and say, well, that's not right. You don't know, like, so say they were misunderstanding what was even happening, but say like the sell ice here, which did work, but say the sell ice came in and they were thinking like anytime you see sell ice, you go short, or anytime you see buy ice, you go long, which is not the case. I have distinct setups that when they're wrong, then you want to take advantage of that too. But the point is, it doesn't matter, what. And the other argument they had was, you don't know what they're doing there. They could be hedging their options. They could be getting out of longs. Guys, you're never going to know. How are you ever going to know that unless you're sitting next to the guy that is putting in 1,000 sell eyes? You're never going to know. So why are you wasting your time trying to understand what they're doing, right? I know this is a very important volume event. I know there was a huge puke here. I know there's a big sell ice here. So whoever was buying on top of this puke, besides the stop run, ran into a mouthful of sell ice. I know that. And then I want to see how the market reacts to this volume event. That's all you need to know. And then when you have rules in place, and my rules are, again, ATR and understanding the retest and stuff like that. When you have a rule and you follow your rules every time, you will be a profitable trader. But you can't just, how many guys just open their chart and like, this looks bullish, I'm going to buy right here. I tell this story. This is I don't even want to know the percentage of traders that do this. So back in my trading firm days, so before I became a bigger trader, I had to share an office with someone, right? So this guy, I'm not exaggerating, right? He was my office mate. He would come in and he would be trading or whatever, and then he would leave the office and he'd go, this is most of the traders in the firm. Once they made like a certain amount of money, I get the golden amount back then, and this is going to give me another tangent about stopping when you're making money in a day. But anyway, they'd make $5,000 and then they go to the game room and play video games the rest of the day because they'd be happy with $5,000, right? Yeah, $5,000's a lot, but my thinking was, well, if you can make 5, why wouldn't you sit down, stay there and make 10? If you can make 10, make 20, right? So, but this guy would leave. He'd make a little bit. He'd make like $500. He'd leave, go screw around, come back. I swear he would sit down at his computer. Within 3 seconds, he'd have an order on. He would just click the mouse and then see how it went, right? So it's like, guess what? Guess how long that guy lasted, right? So that's my point. You need to have an understanding of basic market function. You need to understand these volume events, and you need to have rules of trading the volume events. If you get all that down, you will be profitable. I will promise you. But you've got to follow your rules, right? So that leads me quickly to my one rant that I'm going to do today on this ridiculousness. And I guarantee you a high percentage of traders on this webinar do it, right? Oh, I made my $5,000 today. I'm done. Oh, I killed it. Made my $5,000. Made my $10,000. I'm done. Why on earth? Everybody knows how hard trading is. Everybody knows how you get days like yesterday that just kill you. If you're trying to fade it and so on and so forth. So the days that things are working and you're seeing things clearly and the market is agreeing with whatever you're looking at, why on earth would you stop at a certain amount of money that you made? Now, don't get me wrong. If your goal, which you shouldn't have a goal for the day on the upside, on the downside, yeah, if you hit a downside amount, then you quit. But on the upside, hit your goal. You don't just get up and leave. Give yourself a chance to have a losing trade, and then you can give some back, right? So you say, if I go up $5,000, if I drop back 1,000, then I'm done for the day. I'm perfectly fine with that. I'm not saying be up $5,000 and give it all back. I'm saying give yourself a chance to have a month making, year making day when things are making sense to you. Don't get up because you made $5,000. If that $5,000 could be 10, could be 20. And this is why I made so much money at the time. I would sit in that chair for 9 hours straight. I would run to go to the bathroom as fast as I could, come back, sit back down, back to scalping. And then the other rant I talk about too is take off your P&L. So, have it in place with your brokerage firm where you get, when you hit a certain amount on the downside, you're done for the day. They should liquidate you. If your broker does not do that, find a broker that does. There is no excuse. Brokers should want to do that for you anyway, because the brokers want you to be trading because they want your money from commissions. So if a broker won't do that for you, find another broker. There's plenty of competition out there, right? So, if you hit your drawdown, fine, and have, make sure that everyone has a plan. They get punched in the mouth, as Mike Tyson says, right? So don't think that you can just say to yourself, oh yeah, if I go down $2,000, I'll quit. if you're most traders, you're very competitive, that's not going to happen, right? So make sure that you have something in place. And if you're making money, please, I beg you, do not get up out of your chair until you at least give some back, then you can quit, right? You will be amazed at how much money that you will make by doing that. And then the other thing is turn off your P&L and just, that's where I was getting at. Turn off your P&L and just trade your rules. And you're going to know at first if you're making money or losing money, and then you'll be amazed that you'll start to lose track if you don't have your P&L showing. And then you'll bring up your P&L at the end of the day, like, oh my God, I just made $30,000. I thought I was up like $6,000, right? Trust me, that is like the magical key to trading, when you can finally turn this off and just trade. So those are my rants. I know we're on here to do live trades, but there is really nothing going on. I'm waiting for events in there. I think I heard something in here. Let's see. Any comment or questions on that, Bruce? Pretty self-explanatory, but
A few questions that
we're not getting ATR below here. So if I was going to short this, we were talking about how bullish this did look. But again, if it was bullish, this is a perfect example, guys. If I'm staring at this chart and you held a gun to my head and said, "Hey, you have to trade right now without any volume setups." Sorry, my volume was down. If you were talking, Bruce, sorry. You need to trade this market right now with no volume setups. What we were talking about earlier. Well, 100% I would have said, "Oh, I want to go long because of this and this." Yeah, and guess what? I would have gotten killed. What happened here? The volume event never got an ATR above here. This was a bearish volume event. What is this volume event? This is broken ice, right? Actually, this is a new one. We can draw that. But this failed, right? So real-time volume told me, yeah, I was bullish. I wanted to be a buyer. This told me, yeah, no go. You see why this is so important in your trading. I don't care how great of a technician you think you are, a market technician. You are not. You will be 100 times better understanding what the real-time volume is doing. All right, so actually I needed to draw this. This was actually a massive, I don't remember hearing this. So let's get rid of this. I already missed it aggressively, but I probably wouldn't have been aggressive here anyway, because we're close to the red lug or blue lug. So, but if this retests, I will trade this. This is a double whammy. This was sell stops into buy ice, right? So I usually say the dumb money into the smart money. Let's get this, and you can see here they're hammering these, by the way. This is tick strike. I showed you guys on my website. I think they still have this. They have some lifetime sale going on too. Look at my on my Twitter page. I posted it. I don't know if it's still going on, but you can get it for the lifetime. Don't get me wrong. You will be tortured by it, especially when you have something against you. I say it every webinar. There's nothing worse than watching your P&L or watching your trade go against you. You shouldn't be looking at your P&L, like I just said. But watching your trade go against you and you get to listen to it too, that's not so fun. Tickling all your senses. All right, so this was the volume event. Again, I would not have shorted this aggressively. You could have if something lined up. I know we were close to the red lug or the blue lug too. But if this happens to do this, then I'll short it. And by the way, look where this is headed. We talk about this every webinar too. So when you're coming up with your thesis during the day, or you're saying, okay, what's my bigger picture view? I want to be long or short. Well, you can say, we talk about the scale all the time, right? So very rarely is everything lined up on one side of the scale, meaning I want to be bullish or I want to be bearish, right? You're going to have, okay, there's this, and this on the bull side, this, and this.
Stock sells ES 360 per contract.
This right here, obviously.
151 contracts.
I forgot how I was going with that, but the scale's not always usually lined up, but if you get everything lined up, then you could be aggressive in one direction. And I wouldn't have been aggressive, so I missed that trade. But now, well, shockingly, that the liquidity got filled. So I was talking about having a thesis, right? So your thesis could have been, that's where I was going with that. Okay, we talked about the balance area, blah, blah, blah. I want to be long for that. But hey, the real-time volume, there's liquidity way down here, and I know liquidity is a magnet, and I know it's going down there eventually to fill, right? See what I'm saying? So if you had a short bias, then you see liquidity, and then you see this volume event, you're in immediately breaking that. You see what I'm saying? So that's how you trade. That's how I trade. All right, so let's draw this, and then obviously I missed one NASDAQ trade, and then I didn't really do anything on this one. Still chance though, and I'm pretty sure we'll be building new lugs here, so I won't be selling into the blue lug, which is never a good idea. All right, so that's that. That's very decent size. My threshold for soybeans is 150. You're safer going closer to 200, but I'll go down to 150 to take trades off. Again, so thresholds are just volume events that are worthwhile, right? Don't get this SI indicator and start trading every spike in the SI indicator, right? Like this was still threshold, but if you see like a 60 lot stop run, that's not worth trading, or 80 icebergs, right? Wait till it gets to threshold, and that's just from watching thousands of these. I know what the thresholds are for each market, and that's part of my course, the SI indicator course, which the new one is almost complete. I keep getting emails on it. Guys, it's just, I'm trying to, incorporate all this new stuff from Bookmap, not only SI indicator, the SIN chart, the sweep factor, all this stuff is going to be in the new course, as along with the ATR, drawing zones, everything. So it's just, I have a life too that I sit here all day on my webinars, and then I get done, I'm exhausted, then I got to sit there and work on the course, so it's taking me longer than I wanted, but it's getting close. And if you bought a prior course, or you bought the course prior, there will be a deep discount for it. If you're a member of my room and you bought the course, you're an active member of my room. When I release it, you get the course for free. So don't fret if you just bought it. We'll have some very good deals for you, even if you're not part of my trade room. All right. I wanted to see where we are in the lugs here. Why did I lose my... What's happening here? Did I lose internet?
No, you're good.
My squawk went down too. So we got the squawk channel in my room too. That just went down. Hold on, let me bring this back up just so I can hear this guy.
Can you hear me, Scott?
Yeah, I can hear you.
Okay.
You hear me?
Yeah.
You hear me?
Yep.
Can you hear me? Can you hear me now? Can you hear me now?
Yes.
I was trying to mimic that AT&T commercial, whatever that used to be.
Verizon.
Verizon. All right, so this is what I was looking for here. So this is the squawk that members in the room can see as well. So you can see all the numbers, and this guy talks, so we know when stuff comes out, even though half the time it's market moves like 50 points, then we hear what's going on, which is not helpful. All right, let's see here. All right, so you see here we're at the blue lug. We're actually below it, so I'm waiting for new lugs to be built if they haven't been built already. So at any minute now, this should build new lugs. So if you guys haven't watched the webinar that I did with Pamela Ludwig, it's been all over this room. It's in my, if you want to just email me, you should be able to find it in the room. But one of the best signals is when it breaks below a lug, and then it doesn't form new lugs. It doesn't have whatever her indicators are to build the new lugs, the components to build new lugs, and it gets back above, then it rips. So what are we seeing here? Bigger picture. First of all, it's accepting into this mammoth. Remember we just drew that? That's bearish. There's your new lugs. You saw that?
And soybeans, stock sells ES.
Here we go.
211 contracts.
That's a new setup. Now I can go short aggressively. I want to because we just built new lugs. I just didn't want to do that into the lug. All right. So this thing's obviously getting smoked. And then this is tick strike. Bookmap is testing out this new. They haven't released it yet. This is going to be incredible. This is like this on steroids. I'll let Bruce talk more about it if he wants to, but that's coming soon. That's going to be awesome. I can't wait for that. And there's your new setup. So Bookmap is going to be a one-stop shop. Can't wait for this, for volume stuff, that is. All right, so quickly, this zone is 37.
Iceberg class EL, 155 contract.
I'm not going to draw that zone. That's soy oil. We're watching those other markets. You guys are mad enough that I look at soybeans. I can imagine if I get to go over to soy oil, you're going to be like, what the hell? I don't look at soy oil. So 1437, 3575. Draw this zone, and then I'm going to trade this. See if we can put on a trade on this webinar. That'd be great. What did I say? 37, 35, 75.
Iceberg class EL, 175 contract.
You're sure you don't want to trade soy oil? Activity in there. Like I said, it's all the same. I don't care what market you're watching. Volume events are volume events. All right, so if I want to go short here, I could short aggressively at 32.50. Stop goes at 40. I can put on 8 contracts. Again, if you're a member of my room, you get the spreadsheet too. So that's where, I don't think that's just like my little private thing. A couple of guys have really worked on that in my room. It's been very helpful. All right. So I just got to decide, do I want to be aggressive here? I mean, so what happens a lot, I just feel like I've kind of missed the boat on this trade as far as being aggressive.
Soy oil iceberg size EL 151.
So this is key. So here we go. This is what I'm talking about with relative volume, right? So remember we talked about, so I just made a mistake here because I just didn't look over. I said I don't take trades into the lugs unless there's high relative volume. We'll take a look at this. This, guys, this is stuff you have to keep an eye on. It's the driver of these markets. So these are volume events as well. You see this relative volume? I don't know, is 6 times normal volume for this time period? 4 times? 3 times? Is that something that you need to know? Absolutely. I would have shorted that last stop setup if I had looked over here. I will take trades into the major lugs if I see the big money. This is major money coming into this market right now, right? So I basically I should have been short off of this setup here. Let's just make this a different color. And then what I was getting at too, when I was looking, remember we just talked about the standard deviation algos that snap it back. Well, guess what? This is like a self-fulfilling, like I can't think of the word, but so you got these algos right now that just buy at these standard deviations, right? They say they're programmed to snap back reversion to the mean. Well, guess what? There's huge money in here running them over. So they buy it, they get run over, they buy it, they get run over, they buy it, they get run over, right? Because they keep playing the standard deviation. Well, when the big money is actually in here active, they get smoked. And that's when you get the hugger. Doesn't happen very often. I just talked about it earlier. It's probably 5% of the time. But that's what's happening here. That's why it's hugging. That's why it blew through the lug. Big money. It's 6 to 3, 4, 5 times the volume is coming in right now. That is so important to know. And then when it subsides, this area is like its own little volume setup, right? So you want to really, if you're trading soybeans, which you should be, this is a great product to trade, in my opinion. One of my best products, actually. This area, from when this basically started, so it was right there to there, it's like its own zone. Yeah, it's 15 cents wide, but the point is the move out. So you got to remember, yeah, there's high relative volume. They're selling the crap out of it, as you see, as you heard. But guess what? There's someone on the other side of this trade absorbing those orders, right? So this story is not fully told yet. Yeah, they're winning right now. But guess what? If this market is able, so you want to wait for this to subside a little bit and then say the volume dies down, and then you have this area. Well, guess what? The breakout of this area is going to be the next move, because all these guys, all these buyers that took these, a lot of them are probably still in the trade, holding. It subsides and it makes the next move lower. You see some more stops. What do you think this is? What do you think these stops are? These are this move started where? Up here, right? Started up here. This is where the high relative volume started. So here's all the selling. You can see the bubbles, right? Somebody's buying those. They're passively buying, meaning they're just passive orders in the order book. The aggressor was the seller. They got run over. They're holding. They're like, oh yeah, I think I got it. Nope, got to puke it. Okay, I think I got it. Nope, got to puke it. See that? Guys, it's simplistic, but this is what's going on in these markets. So the point is, now this is kind of subsiding. Now we have this area, this main area that I just showed the relative volume. It'll probably do this, screw around, and then the next break out of here is going to be the whopper. So pay attention to relative volume is the moral of that story. So anyway, back to this volume event. So what I'm going to do here, just because, this has been pretty prolonged now, it's a pretty big move down, 15, 20 cents. I will still short this, but I want to see ATR retest failure. And if this holds, I could go along, but I just got to be very aware it's going to be rough sledding to get through all, because just think about it. If you are the buyer, you were buying this entire time down, passive buyers getting run over. Well, guess what? This went further. Say you didn't puke. Say you weren't one of those 600 stop runs that just fired off those back-to-back stop, and you still have it. You're like, please, God, just come back here. I'll get out, right? So that's why it's going to be very hard for this thing just to do that. It's probably not that it can't rally, but if you do get long on this setup, it's probably going to be torture, because as this comes up, all these buyers need to peel out of their positions that held on, that didn't puke, that weren't part of these two pukes. You know what I'm saying? So my point is, do I go long here? Yeah, I think overall this market is still bullish, like we talked about. Right, where's my chart? But here it is. No, that's NASDAQ. Well, speaking of which, we got algo guy pull. So now I could go long. See that? This is interesting too. I don't mean to be flip-flopping here, but you got the pull. You got these algos that play the cross. Many times it comes back. It'll test the red and go. This tried to pull below. It couldn't pull the blue. No, this is very likely. So that's interesting. We may go right back up now. That would be real shocking after yesterday. Not. What was I going to show you? Chart-wise. Oh, I already showed this, but why don't I? What's my chart here? I don't know what I did with my hourly chart, but I've showed it like 5 times. This is bullish market, big picture. So I will go long this setup, right? Meaning this is the most recent setup. What do I need to see? ATR, retest, fail. I will go long, but I'm well aware that is going to be probably pulling teeth to rally at least throughout this first part. Trust me, if this gets above this, then this thing's going to rip. But I will go long because I let the volume events tell me what to do, right? So on the short side, I could go short aggressively. I'm not going to do that right here either because I kind of missed the boat. I should have done it on this one. But I will go short if we go ATR, retest, failure here. So we'll keep an eye on that. Hopefully something happens. There's nothing in NASDAQ, nothing in ES. And as usual, it's just crazy how these markets just gravitate to the volume events. It's nuts. There you go. There you go. Right. So now I'm just waiting for something new. There's just been nothing new, and that's how I trade. This was a long time ago, so I wasn't trading off of that. This one never retested, so I wasn't trading off of that. Right. So waiting for a new event. Could be in 5 minutes. It could be in 5 hours. But I don't see how this keeps you out of trouble. Like yesterday, we were on that Bookmap webinar with Bruce, and the market was ripping, and I was joking, but I wasn't joking that it kept me out of trouble. But the point was, this entire move here, there was not one short setup, not one. It was like stop, run, buy ice, sell ice, stop, run, buy ice, and not one of these failed to the downside, not one. So that would have kept me out of any shorts. See what I'm saying? So this is why it's like, yeah, if you're a seasoned trader, you're like, this is ridiculous. I'm shorting. Stopped out. Okay, that's enough. I'm shorting. If you're just staring at this stuff. If you're using your real-time volume, you're like, nope, not shorting. Nope, not shorting. Nope, not shorting, because not one of these failed. See what I'm saying? So that's why I wait for markets to get an ATR below the area to short, and you would not have taken one short in that move if you're using your volume correct. First, I got to take a break for time. Questions?
Yeah, sure. Question a while back actually about trading stocks and options. I know you don't trade them intraday, but do you trade them maybe longer term?
Options? Yeah, I mean, again, I am not. I mean, I've learned most of my option stuff from Spot Gamma, right? And he's pretty incredible when he makes his calls. I mean, he was saying to buy some downside. He did say there was going to be a huge rally. I mean, you can read it right here. He said there was going to be, and that's PM. There was going to be a big move from yesterday, and I would say yesterday was a big move. But he was saying there, and he's still saying it that there is a very, I should say very good likelihood, but there's a good percentage chance that this market could pull back because there's a lack of downside protection. Again, I'm not going to get into this. My point is, I don't get into, like I've talked about earlier, make trading as simple as possible. You can go down rabbit hole after rabbit hole, especially his commentary today. I was reading today. I'm like, oh my God, that is so over my head. Like some of the stuff he's talking about. The guy's a brainiac. He's really, really, really smart, right? And that's great. And, you guys got to realize that options players, options dealers that are on the other side of your options trade and the big money options trade, they are a big, big part of the futures trade because they have to hedge their positions, right? That's why these areas I just use as support. I mean, look at that. Like, that's not a coincidence, right? The market came down to this exact 40, and he talks about this today. This is the exact level we call this support, right? Let's read it real quick, and we'll talk about the zero date options or expiration. Let's see. Support today shows at 40.55 to 40.50, the 4,000 being major longer term. Sorry, I don't know. Did this support at 40.55 to the pretty much the tick? So this is why you want to know these areas, right? Because these options dealers are going to be participating. What's been the phenomenon lately? So back to the basics. I just use these very basic, right? When they come into them, they're support. When they come into them from below, they're resistance, right? Then, hey, look at that. Look where this one stopped. There you go. Okay. So that's how I use them and pay attention to them, right? And then there's certain ones that are really important, like the call wall, the volatility trigger. You can go to his website, you can read all about them and get as intricate as you want with all your, and you put on all these different options positions. So yes, I will take longs and shorts, longer term. I was going to put on puts yesterday, and you know what? I almost did it right when Clown Nose Powell started talking. One of the 45 Fed guys a day that talk lately. He's the ringleader, obviously. And you know what I said to myself? I'm like, you know what? Yeah, because I'm inherently want this thing to go to zero. We make a joke every day in my room, right? Well, like yesterday, I was analyzing. And I'm like, okay, this thing's in trouble. And my exact words were, "This is a failed breakout of this smaller structure. This thing, and then we built balance here." And I said, this should do that, right? And I wanted it to do that, and we always joke that it's going to zero, right? But I said, if this thing recovers and it gets back through this high volume node, the subsequent move is going to be multiples of what it should have done, right? So this is another part of understanding market structure, right? So that should have done that. It didn't, and I said, if this gets back through here, watch out, and that's exactly what happened, right? So I was going to short. I was actually going to short into this zone, even though it was through this, because I hate this market, and it makes no sense that it always recovers for all the stuff that's going on in the world, right? So this is another example. Fundamentally, it doesn't matter what you think. It matters what the market is doing, right? So I think this should go down. I thought it should go back to COVID lows. Guess what? It didn't. And guess what? If I'm trading in that manner, fundamentally, I blow up my accounts, right? So you've got to let this is what we talked about at the very beginning of the webinar. Let the market real-time volume line up with your thesis, right? I come up with a thesis every day. I'm probably 50-50, right? But when the market lines up, meaning the real-time volume, Bookmap real-time volume setups, when it lines up with my thesis, then it's go time, right? So anyway, I was going to short there, and I said, you know what? No, why am I don't care. I want this to go to zero. I still think it can come back. But when's the best time to short? Yes, you could probably put on some here. It's not the smartest, but this is an area that led to here. The best time to short this thing is going to be when this gets back below here. Actually, this is NASDAQ. The ES is the same thing, right? That's when you want to go short, not right here. You could put on some feelers here. But the point is, I will put on. I was going to buy puts yesterday, and then I decided not to. Thank goodness, because it would have been right here. They'd been worthless right now. Granted, I was going to buy December 14th puts, but I still will do it if it comes through here. So that is a long-winded answer for yes, I will take longer-term positions through options. I'm not an expert at it by any means. I'm just, kind of just my opinion on where the market's going. My specialty, my talent, where I'm most profitable is day trading, volume events. That's where I shine, right? Doesn't mean you can't trade other things, but I'm under no illusion that, I'm not an expert options player, and I'm not an expert longer term trader. I don't need to be. This is where I make my money. So why do I need to be doing anything else, right? It's good to be right on a call, but who cares? It's like, focus on this. That's what I do. So that's a long-winded answer for yes, I will take longer term positions, but very lightly. Any other questions?
Right. That answered the question quite well. No, I think that's it. Yeah, we're basically all caught up. I mean, kind of answered questions along the way for everybody. Yeah.
So for yes, if you guys are like thinking, okay, where should if I want to do puts, or I will do them. We just read, and he's been talking about this for weeks, this 4,000 level. And that just happens to coincide with the high volume node of this balance. So I can promise you, I'll be willing to bet you a round of golf when you come to Arizona that if this does this and this gets through this high volume node as a failed breakout, we just talked about this too, you're going to get that right to zero. Zero for Christmas. So that's where I will load up. If I load up, and again, I trade a fraction what I trade futures, but I will be very confident of that kind of move, at least down to these areas, at least down to where this gapped up. Right? And he's been talking about this 3,600 area. That was the area he talked about actually before the Fed. So that's where I will buy like the 3,700 puts and see, for cheap and to get down there. This is all stuff you just keep in your head and you watch it. And right now, this is bullish. Yeah, okay. We're just pulling back to this guy. But if this gets below 4,000, then you're ready to fire. I'm ready to fire. All right, so this has been a no trade webinar. Apologies, I did miss the one trade. I could have gone short this setup here aggressively, but we were at the log and I did not. If I would have looked at the relative volume, I would have shorted this one. But woulda, shoulda, coulda, as my grandpa used to say. Woulda, shoulda, coulda. If is the biggest word in the dictionary. Other than that, do you guys want to trade soy oil? Let's take a look here. I guarantee there's guys rolling their eyes right now. Like, are you kidding me, man? But like I said, it's all the same stuff. It's volume. There's spot traders. It's volume events. Right? There's your zone. Very high likelihood when this breaks out of this area, you're going to get a big move. I don't even have the charts for this. Like, we're not going to look at big picture, but guys, it does not matter. I keep telling you, it doesn't matter what market you're doing your disservice if you're staring at crappy ES all day or just one market all day long. I'm telling you. Speaking of crappy ES, a whole bunch of nothing. This entire time we've been on, it bounced off the spot gamma level. There was no setup down here. Again, you could possibly have drawn this zone here. This was close. My threshold is 700. This was 656. So you could have drawn this. Let's just see what this, if this did the retest. I don't think it did the retest. Then I think we got another guy coming on here. So some days are like this. This is my point, right? Did you see me force any trades today? No. I did miss a couple, but I didn't force anything because I'm not getting what I want to see. This is how you will be a successful trader, when you just wait and you wait, and if it's not there, you just don't trade. It's the traders that feel like they've got to catch every move. Those are the ones that don't make it, and that's probably 90% of all traders. 90% of all traders fail. There you go. That's that. Again, you want to incorporate all the prices in that spike. That's that. It was sell ice. That didn't work out so well for this firm. Again, I'm always assuming they're initiating positions. You don't know what they were doing, nor do you need to. You just need to know the area. So that's that. Let's just take a look and see if this did the usual ATR retest. No, that was only about 3 points, so that never came back to that zone yet. Tried here, nothing yet. So I mean, there's just been nothing. If you love the long down here, you could have gone long the minute this broke out of here, and you could have said, "Okay, I'm long." Just giving you guys ideas, right? Long there aggressively. I recommend waiting for it to get outside of 5-minute ATR. Like 5-minute ATR right now is like 7 points. Again, this is just the Thinkorswim default average true range, 14 period Wilders. Excuse me, 7.51. So if you were going to get in, you'd be in at 110%, so 8.25 points above the top of this zone. You would have been in at 70, like 70, 75, right? And you could have taken a portion off. And it's not a coincidence it bounced off of that, right? And then I'd watch this zone. If it fails, you get out of some there, right? That's how you trade. You got to pay yourself when you're right in important areas. So, like I told you before, I wouldn't trade. Well, this zone is still in play, but like the NASDAQ zone I was talking about here, this prior zone, I wouldn't trade this zone now. So say, for instance, because this happened way before. So if it does this, this, and this, I won't trade it. But I will say I got long here. I will watch this zone. If it starts to fail, I'll get out of some. See what I'm saying? But that's where I will trade prior zones. I won't trade them if this event happened, that one's done for me. Right? Doesn't mean it can't react, but it just, I've noticed, over the thousands I've watched, it's just not the best bet. All right, Bruce, a whole lot of nothing today, a little ranting. It is what it is. This is trading, guys. Some days it's great, some days it's not so great. Any other
Okay.
questions? I'm happy to answer, but
No, I think we're all caught up. Yeah. Thanks, Scott. And guys, we have one more Pro Trader webinar tomorrow with J Trader. And just a note for those of you new in here, we're having this discount still, the 50% off the first month of Bookmap. Again, this is for trying Bookmap. If you want to try it out for that month, and then see if this is something that resonates with you. You can also upgrade if you have Bookmap Global and you want to upgrade to Global Plus. This will still work for the first month. Give it a shot. This is the time. See if you like it, and come to the webinars.
yeah. And then speaking of sales, I never do this. Literally, some guy mentioned it on here, and I'm like, yeah, I'll do it. So this is till the 5th, 30% off for the first month. If you want to come check out the room, there's a lot of extra perks in there, a lot of good traders, the spreadsheet, the squawk, you get my templates. So there's a lot in that room that I think is well worth the investment. Plus, I trade 2 times a day when there's actual trades. So I trade at get on around 6 or 8:10 Central. I usually stand for about an hour and a half there, and then I'm back on at 2 o'clock to the close in Central. So 2:15 at the close. So that's what you get from that. Take advantage of that, because that's the first time I've ever offered any kind of discount to my room, because I think it's underpriced as it is for what traders learn in there. So that's all I got.
All right.
Sorry, no trades today. Missed a couple, but that's trading as well. And it's really hard when I'm on one screen and things are whipping around. Sometimes you're going to miss trades. So apologies on that.
Yeah. No.
Hopefully someone learned
I
something.
just blame it on the monitor, Scott.
It's definitely the monitors. Think or swim.
Yeah.
I started with it.
Yeah. Exactly. No. Thanks, Scott. We'll see you next Thursday. Thanks, everybody, and we'll see you maybe tomorrow for the J Trader. Okay.
Thanks, guys.
Okay.
See you
Bye bye.
next week.